You're looking to buy your first home, but you just want to make sure you don't make any mistakes along the way. Well, not to worry, that's exactly what this video is for. We're going to go over the 10-step process to buying your first home. That way, when you decide to jump into the market, you can do it confidently and safely as well. Hey guys, my name is Jarrett White. I'm a mortgage broker here in BC for White Ridge Mortgage, and we help people all across Canada and Alberta, BC, Ontario, and Nova Scotia with their mortgage needs. If you need anything, there'll be a link in the description. Feel free to fill out that form, and we're more than happy to help you out. So I want to make a quick deal with you. If I can provide a little bit of value in this video, please hit that subscribe button, like this video, and ring the bell to be notified. It really does go a long way in helping me reach a larger audience, and I'd really appreciate it. So without further ado, let's dive on to number one, and that's actually assessing your financial situation as a whole. Now, can you actually take on a mortgage? Do you have a down payment saved up? Or what if something as simple as your washer or dryer breaks? Are you going to be able to handle that? These are all things you're going to want to make sure before you even consider buying a home. I like to tell people to at least have an emergency fund of 3 to 6 months. However, I do understand that in BC and Ontario in particular, it's very expensive where we live, so it's not actually realistic all the time to have a 6-month emergency fund, but the closer you can get to 3 to 6 months, the better. Number two would be saving up for your down payment. So here in Canada, the minimum down payment's 5% of the first $500,000 and 10% of the remaining amount. Now, if it is over $1 million, you need 20% on the total amount, but if you're buying with less than 20% down, so with that 5%, then you're gonna have to pay for mortgage default insurance. Now, this insurance cost gets added on to your mortgage, and it is quite substantial, and it does go down the more you're gonna put down. So with 5% down, this insurance cost is gonna be 4% of your entire mortgage amount. So an example would be a $400,000 mortgage, it would have $16,000 added on. Now, if you're gonna put 10% down, that 4% gets reduced to 3.2%, and if you put 15% down, the 3.2 gets reduced to 2.8. However, honestly, it makes a lot of sense to buy with less than 20% down because the time it takes to save up a full 20%, especially here in BC, if you're looking at $500,000 properties, it could be the difference of $25,000 to $100,000. That's a lot of time to save up that money. So in most cases, home prices will actually go up more in that same time period than that insurance cost. Step number three is getting pre-approved by a mortgage broker. And I say mortgage broker because we actually do a much more thorough review than the bank. The bank honestly does not want to spend their resources on their employees looking at pre-approvals because they honestly don't really turn into purchases half the time. Whereas as an independent mortgage broker, it's just naturally I have to actually give much more accurate info because I'm a lot more liable for that info. So if I'm telling you that you can buy up to $500,000, I better be sure you can actually buy up to $500,000. Whereas the bank, they actually don't share much of that same liability because they're not even licensed. So get pre-approved by a broker, and what getting the pre-approval done will do, so it's gonna outline your max mortgage amount, it's gonna outline the monthly payments you can expect, the lenders, the rates, all that kind of stuff, even the closing costs. So that way, when you go to buy your first home, you actually have a clear picture of the entire cost, and you know exactly what to expect, and there's no surprises down the road. Step number four is budgeting for those additional costs. So it's not just a mortgage that you have to worry about because you actually have to worry about your strata fee, your property taxes, you got a Wi-Fi bill, you got groceries. Don't forget about Netflix or Prime Video because let's be honest, everyone has those nowadays. And even though they're very small, everything together does add up. So make sure that you're actually creating a budget and you know exactly what your monthly costs are before going into buying a home. Step number five is probably the most important step, and that is hiring a realtor. And I'm gonna say this once, not every realtor is equal. And just because a realtor is free to use for a home buyer, that doesn't mean they're not gonna cost you a lot of money if you don't choose correctly. If you just choose a family member or a friend strictly because they're a family member or a friend, you could be losing thousands of dollars. Now, that's not to say that's always a bad idea, but to be honest, you're gonna wanna either go with a referral from a family member or a friend, or even from your mortgage broker to determine that you're actually working with a good realtor. And a good realtor really boils down to their negotiation skills. They can quite literally save you tens of thousands of dollars just by being really good at negotiating and having lots of experience at their job. Keep in mind though that if you are asking a family member or friend for a referral, make sure they've actually used them too. A lot of the time, people will refer a family member or friend of theirs just because they want to do something nice for them, not because they've actually used them in the past. So make sure they've actually used them before you decide to use them as well. Another good way is to actually look into their Google reviews. So a lot of the time, people will leave reviews after using someone's services. Look into their reviews, see how many they have, and see how good they are. Oftentimes, when people ask their clients for reviews, you can really tell if someone had a good experience or if they just had an okay experience and they're just trying to write the review to do something nice. Like if it's just like exceptional service, period, well, they really didn't put much effort into writing that review. However, if it's like a full paragraph, obviously that person had a very good experience. And the more reviews like that you can find, the better. If you don't have any family members or friends that have someone to refer, your next best option is turning to your mortgage broker. And I would even say this is better than getting one from your family or friends. However, that could be a little biased, but to be honest, we work with hundreds of realtors, so we can easily separate the good ones from the bad ones. Just let us know and we're more than happy to give a recommendation. Step number 6 is viewing homes. You're gonna wanna make sure you view homes that only fit your criteria. I like to tell my clients to make a list of the must-haves and the wants. And as long as the properties have all the must-haves, then go take a look. If it doesn't, don't bother, don't waste your time. Now, if you do find something that you really like, especially in this market in BC, you're gonna wanna make sure you put an offer in on it. Because to be honest, if you keep looking, by the time you actually decide that that was the one, it may already be gone. So if you like something a lot, put an offer in on it. Worst case scenario, you'll have an option to back out later. But if you do really like it and you see potential, place an offer, because to be honest, you might not get that chance again. And you guessed it, step number 7 is actually placing that offer. And this is where your realtor really comes in handy. Now, a good realtor is very good at negotiating. They're gonna be negotiating the price, but they're also gonna be negotiating the terms and as well the dates. So the terms would be stuff like subject to financing or subject to inspection or subject to sale. And you're probably wondering what that even means. Well, subject to basically means I'm gonna buy this as long as blank. So there's subject to financing, subject to inspection, subject to sale. There's so many different subjects you can include, but the most common one is financing, and the second most common one is probably inspection. Now, subject to financing is basically saying I'm gonna buy this property as long as I can make sure I get my mortgage approval first. Subject to inspection is basically saying I'm gonna buy this property as long as I can get someone to go in and look at it first and make sure there's no issues. So it's very important to have a subject to financing in your offer, especially if you're putting less than 20% down, because like I said, you have to get the mortgage default insurance. And sometimes these insurers are quite picky with the property. So if for some reason they say no, you're kind of in a bad position. So make sure you put subject to financing in place. Another thing the realtor is going to negotiate is the dates, because oftentimes the dates can actually be very valuable. For someone buying the home and they're already paying rent, well, moving in sooner could actually save you quite a bit of money. Whereas someone that's selling that hasn't found a home yet, they might want longer dates to give them time to actually find a new home. So dates can be valuable, and I've actually seen people take $10,000 off the purchase price just to have more flexible dates. So the realtor will know exactly what price you should be offering, and they will let you know what you can get away with when it comes to dates and different terms. But a must-have in pretty much every single offer to protect yourself is that subject to financing. Step number 8 is the accepted offer. So now that the seller said, okay, we accept your offer, now you're gonna go and get that mortgage approval. So you're gonna go back to your mortgage broker and we're gonna sit down, we're gonna talk about all the different products you have available to you. Should you take fixed rate? Should you take variable rate? What terms should you get? 1, 2, 3, 4, or 5? So we're gonna structure that around your unique situation. Now it's different for everyone. So I can't just say, this is the best product, because that depends on what your goals are in the future. There's a lot that goes into a mortgage, and it's not just the interest rate. For instance, the lowest rates right now are with 5-year mortgages. However, to get out of a mortgage early, there's a very substantial penalty. And if you know that you're already going to want to upgrade in the next 2-3 years to maybe something a little bit bigger, well, it wouldn't make sense taking a 5-year term, because even though you might be saving a couple $100s a month, that penalty could be $10,000. So we really need to structure this around your unique goals, and we're gonna sit down and talk about all the options you have available to you, and we'll definitely be able to decide what the best option is. Once we decide on what option we're gonna go with, this is when we submit it to the bank, and typically within 24 to 48 hours, we get a conditional approval back. And it's called conditional because it's approved, but they wanna see some stuff first. Oftentimes, this is just a lot of admin stuff like supplying a void check or sending a picture of your IDs. But every once in a while, the lender will request what's called an appraisal. Now, the reason why the lender wants an appraisal is because this is to verify the value of the property. They only want to lend a certain percentage of that total value, and they don't necessarily know that that purchase price that you paid is actually the value of the home. They're protecting their investment by verifying that value, and you actually have to pay for this assessment. It's typically about $350 to $500. But if you do go with us at White Ridge Mortgage, we do cover this for everyone. You pay it up front, and then at closing, we reimburse you. However, oftentimes we can actually get it waived directly with the bank. So So like I said, when you get that conditional approval, there'll be a list of things that you need to satisfy. And in most cases, they're very easy to satisfy, especially if you got pre-approved by the mortgage broker to begin with, because we already have a lot of the stuff that we need to satisfy them. But the most common one that comes across is the appraisal, and that will need to be paid for. And this could throw off a file potentially. If you bought a property for way more than what it's actually worth, the appraisal will come back too low, and now the lender is actually going to adjust how much they're willing to lend on that property. But that's exactly why you would have that subject to financing in place, because if the appraisal came in low, well, now you can just walk away. You still don't have to commit to it. So it's very important to have that subject to financing in place, because there's going to be some conditions that need to get satisfied, and it's not always your fault why an issue comes up. Like, you could be perfect income wise, you could have your down payment saved up, and something could still throw off a file such as an appraisal with them valuing the property lower than what you purchased. So it's always good to have a way out before you know that you're 100% approved. This is also when you're going to get your home inspector to go in and view the property and make sure there's no issues that are going to cost you tens of thousands of dollars down the road. This is another thing that you have to pay for. It's about $350 to $500, but to be honest, that $350 to $500 could save you tens of thousands of dollars down the road. You're spending $500,000 on a home. Why not spend a couple $100 and make sure there's no issues? Step number 9 leads me to the subject removal. So typically those subjects, the financing, the inspection, that's a certain time frame that you have to get them done. You can't just do them whenever. There's typically about 5 to 7 days that you have to get them done. And after the 5 to 7 days, you have to choose whether you're going to remove your subjects, which means you're continuing with your offer, or you're going to back out. So once you remove your subjects, that means you're fully committed to buying this property, and that's when you'll give the seller a deposit. Now, the deposit is typically just a small percentage of your total down payment. So an example, if you have a $50,000 down payment, well, your deposit might be $10,000, and then instead of bringing $50,000 to the lawyer at closing, you'll bring the remaining $40,000. So it does make up your down payment, and you're giving it to the seller, and it's actually held by the realtor of the seller at their office in trust. So it's not like the seller can go and spend that money. It's just held on the side by their realtor. It's just very important that you have a talk with your mortgage broker at subject removal and make sure that it's safe moving forward, because oftentimes you actually won't have a full approval even when you remove your subjects, because there still might be some conditions remaining, as simple as signing mortgage approvals or supplying void checks. Now, the reason why we don't often sign the mortgage approval right away is we constantly negotiate that rate down as we get closer to your closing date. And if we sign it, well, then we just have to end up signing it again. So oftentimes we do let it sit, but it's not like it's anything that could actually affect your approval. Now, the only thing left after satisfying all those conditions is step number 10, and that's signing at the lawyer or notary's office. So you're gonna get to choose if you wanna work with a lawyer or a notary. The cost is gonna depend on who you work with. Notaries are a bit cheaper because they don't actually advise you and they won't represent you in court if anything goes wrong. Whereas a lawyer is a bit more expensive, but honestly not much more expensive, just a couple $100, and they'll actually advise you. And if something goes wrong, they'll also represent you in court. So I always recommend a lawyer, but if you choose to go with a notary, that's typically totally fine as well. They're also pretty great. So what's gonna happen is about 2 weeks before your closing date, your lawyer or notary, whatever you chose, is gonna give you a call to book an appointment to come in and do your final signing. They're also gonna let you know what you need to bring, which is typically 2 pieces of ID and the bank draft for the remaining down payment. Once you sign at the lawyer's office, what they're doing is they're giving that mortgage money to the seller and they're transferring the seller's title to your name. Then after that, a couple days later, typically about 2 to 3 days, you're gonna meet with your realtor at your new home. They're gonna give you the keys. And then aside from that, you're all done. All you gotta do is transfer all the addresses over on your IDs, get a moving truck, move all your stuff in, all that painful stuff. But honestly, it's all worth it, because once you own a home, you're at least in the market. Starts going up, at least yours is going up with it. Now that is the entire process, completely simplified. Now, if you have any questions whatsoever, feel free to leave them in the comments. I'm more than happy to answer them. Or if you're looking to get pre-approved for a mortgage, there is a link in the description. Click that, fill out the form, and I'm more than happy to have a chat with you. Now, if you did find value in this video, please hit that like button, subscribe to this channel, and ring the bell to be notified. It really goes a long way in helping me get in front of more people, and it'd be much appreciated. Thanks a lot for watching, guys. Catch you on the next one.